As I've said many times before, the economic crisis of 2008 was only a speed bump on the way to the main event. I believe that before the end of this decade, there will be an economic crisis so historic that it will eclipse the crash of 1929 and the subsequent Great Depression. I also believe that it is both unavoidable and inevitable because it is merely the free market releasing stored-up energy from decades of economic manipulation. Yes, bad things are going to happen, but it could be the best thing that ever happened to you. This guide started out as the top 10 reasons to buy gold and silver and was originally drafted by some very good and well-intentioned employees. But when I read it, something just didn't feel right. It contained all the usual reasons that any precious metals dealer would point out as to why people should own gold and silver. Though they were all very good reasons to own gold and silver, they weren't the reasons that I buy gold and silver. So here you go, a countdown of the top 10 reasons that I buy gold and silver. Top 10 reason number 10. All the world's currencies are fiat, and fiat currencies always fail. 99.9% of the world's population is unaware that we no longer use money. We use fiat national currencies. What is a fiat currency? Fiat currencies are faith-based. They are national currencies that are not backed by anything of value like gold. Instead, the government just declares that they have value, and as long as the people keep believing, they do have value, and the people accept them for a while. But here's the thing. There have been thousands upon thousands of fiat currencies throughout history, and they have all failed. 100%, no exceptions. But there is a vast difference this time around. Since 1971, for the very first time in history, all the world's currencies are fiat currencies simultaneously. Remember this as we progress through the top 10. All fiat currencies fail. Top 10 reason number 9, the current state of the global economy. Throughout history, societies have swung back and forth from quality money to quantity currency and back again. Originally, quantity currency took the form of debased coinage, like gold and silver that has been diluted by adding cheap and abundant base metals such as copper. Then it took the deceptive form of national currencies that were initially backed by money. In other words, they were claim checks on gold. But once these were established, governments then changed the laws to make fraud legal so they could print claim checks on gold that didn't exist. The next step was to sever the connection between money and currency entirely. Back when we used real money, gold would automatically balance all economies. When one country would experience an economic boom, they would import cheap goods from countries with depressed economies and lower wage rates. The outflows of gold from the boom country would cause a deflation, cooling the economy, while the countries experiencing gold inflows would boom, causing their labor rates to increase, which in turn would cause the prices of their goods to rise. This meant that trade imbalances would always automatically rebalance. With gold, government spending was also constrained. If a government wanted to spend more than its income, also known as deficit spending, it had to borrow gold from the private sector. If the government borrowed too much gold, it would cause interest rates to rise, which in turn would slow the economy, which in turn would cause tax revenues to fall. But the debt-based global monetary system has allowed deficit spending and trade imbalances and bubbles to persist and balloon to levels unprecedented in all of history. The credit debt bubble and the derivatives bubble threaten to take down the world economy. The only comparison you could make is to take every great bubble in history times 1 million and have it burst everywhere on the planet simultaneously. It threatens to be a global financial nuclear holocaust, the only survivors of which will be the owners of gold and silver. Top 10 reason number 8, a new world monetary system. I am a firm believer that everything happens in waves and cycles. When I was writing my book, I discovered that every 30 to 40 years the world has an entirely new monetary system. We have had 4 different monetary systems in the past 100 years. The system we are on today is the US dollar standard. It is an aging system that is way overdue for its own demise. It is now developing stress cracks and will one day implode. Before the end of this decade, history will repeat, And just as in 1922, 1944, and 1971, there will be an emergency meeting of economists and government representatives to hash out a new world monetary system. It's normal. No man-made system can possibly account for all the forces in the free market. They get old, they develop stress cracks, and they implode. But what is different this time around is that the last three transitions were baby steps from full gold backing to partial gold backing to less gold backing to no gold backing. In each of these transitions, the system we were transitioning from had a component that could never fail: gold. This time we will be transitioning from a system based on something that has always failed: fiat currencies. The key component to this transition from the US dollar standard to some new standard is, of course, the US dollar. But the US dollar represents more than half of the value of all the world's currency. A dollar crisis would cast doubts on all fiat currencies, and the cascading effect of loss of faith could cause the rest of them to fall like dominoes. The central bankers will try everything they can think of to keep the fiat game going, but when everything they try fails, they'll look around and say, "What worked before?" And once again, the pendulum will swing back to quality money. The only beneficiaries of this event will be gold and silver and those who own them. Top 10 reason number 7. Gold and silver come with a central bank guarantee. My book was written from 2005 to 2007. In it, I said there would first be the threat of deflation. This came true with the crisis of 2008. To which Ben Bernanke would overreact with a helicopter drop of currency. This came true with the bailouts and QEs, which would then cause an inflation. This came true when the stock markets and real estate markets reflated. So far, the Federal Reserve has not only lived up to my predictions, but it has surpassed even my wildest nightmares. They believe that they can fix things by running the printing presses. But the tail does not wag the dog. The free market is responsible for our prosperity. It is the economy, not the numbers they print on pieces of paper or conjure in computers. So now that they have proven that massive currency creation doesn't work, they're going to double down on it. But it is the market that ultimately rules. They are about to discover the horrific economic consequences of their reckless actions. As I said in my book, next there will be a real deflation, a contraction of the currency supply they cannot control. This will happen when the credit, debt, bond, fiat currency, and derivative bubbles begin to implode. The reaction of the world's central banks will be to print until deflation gives way, which I believe will cause a hyperinflation. But a hyperinflation doesn't even require a nation to print its currency into oblivion. It only requires a loss of faith. But never fear, because periodically throughout history, gold has revalued itself as it is bid up in price by the free market as people rush back to it for safety. This is when gold does an accounting of all the currency that's been created since the last time gold did an accounting. In doing so, its purchasing power rises exponentially. It has always done this, and I believe it always will. Top 10 reason number 6. Everything else is a scary investment. By any realistic measure, stocks have been in a super bubble for more than a decade now, with valuations and yields in the danger zone, while bonds are in the later stages of a 30-year bull market and real estate is still deflating from the biggest bubble in history. Dr. Robert Shiller of Yale University has compiled data on the stock market going all the way back to the year 1880. His research concludes that by one measure, the stock market has been in a bubble since 1998, and by his other measure, it is far bigger and more extreme than any prior bubble, including the stock market bubble of the Roaring Twenties that led to the crash of 1929. Further research shows that the only reason the markets have been levitated to these levels is due to the Federal Reserve stimulus. What will happen when increasing stimulus no longer works? I wouldn't want to be invested in stocks when it finally implodes. U.S. Treasury bonds have been a great investment for more than 30 years, but no bull market lasts forever. In fact, for the 37 years after World War II, bonds were such a bad investment that by the end of the 1970s they had earned the nickname certificates of confiscation. But that was back when countries were financially responsible. Now most countries on the planet run their finances like Greece, and the United States of America is leading the way. And as the world's central banks keep interest rates low, it's caused bond investors to take extraordinary risk in search of a reasonable return. We are now in a global bond bubble that dwarfs anything in history. I believe that this has made the bond market one of the most dangerous places to be invested in right now. Dr. Shiller is also the creator of the Case-Shiller Home Price Index. His data on real estate suggests that since the popping of the bubble in 2007, real estate values have bounced back into a small bubble. But what worries Dr. Shiller most is that institutional investment firms have bought up as much as 30% of the homes that were foreclosed on since the crash of 2008. This has the potential of making real estate as volatile as the stock market. If these firms ever decide to sell, they can dump thousands of homes on the market all at once, causing the 2008 real estate crash to look like the calm before the storm. Personally, the thought of investing in real estate right now is downright scary. So the stock market, bonds, and real estate are either in a bubble or have been in a bubble in the last decade. Gold and silver, however, haven't been in a bubble for more than 30 years, and from my measure still appear to be less than halfway through their bull market. The next great bubble will someday be gold and silver. It's just their turn. Top 10 reason number 5, market psychology. Nobody can really understand the markets or the economy, but you can get an inkling of what they're about if you understand what drives them, greed and fear. And the most entertaining part of monetary history is the study of their byproducts, manias, panics, bubbles, and crashes. When you study these, you quickly learn the meaning of the old saying, "The bull climbs the stairs, but the bear jumps out the window." What it means is that it can take years to create a bubble, but only days or weeks for it to burst. This is because, when it comes to greed and fear, fear is by far the more powerful emotion. Gold and silver are sometimes the exception to this rule because they can rise as fast as lightning in a panic. In the golden bull market of the 70s, it took 9 years for gold to rise from $35 to $400. But once a panic out of dollars to the safe haven of gold began to develop, it only took 33 trading days for it to more than double, rocketing to $850. But actually, it was only a very small percentage of the population that was panicking out of dollars in the 70s. This time, I think it'll be everyone. Where do you think gold and silver would be headed if my reasons 10 through 6 come to pass? Top 10 reason number 4. This time, it really is different. The differences between the precious metals bull market of the 70s and the great gold and silver rush of today are vast. In the 1970s, only 2 major exchanges, one in London and one in the US, set the price of gold. So it was only North America and Western Europe, about 10% of the world's population, that could participate in that great gold rush. This time, it's the entire planet. In the 1970s, the number of investors in state-run economies like Mao's China or the USSR was 0. Now those countries are home to more than 100 billionaires each. Much of the rest of the world lived in extreme poverty. Today, there are almost 1,500 billionaires in the world living in more than 50 countries. Every country on the planet has expanded their currency supplies about tenfold since the 1970s, so each potential investor has 10 times the currency. And within each population, there has been the extraordinary development of the investor mindset. In the 1970s, we were a planet of savers. But then, as nations around the world abandoned gold and silver as money and adopted fiat currency, inflation raged, punishing savers and rewarding investors and speculators. Then we had the tech bubble of the 90s and everybody became a stock trader. Then we had the global real estate bubbles and everyone became a real estate investor or flipper. For more than 30 years, saving has been punished and investing and speculating has been rewarded. The result is that there are many, many times more people likely to invest in gold and silver this time around. The number is very hard to project, but I would guess it's somewhere between 10 and 100, but possibly even as many as 1,000 times more people with an investor mindset. Remember that in the state-run economies, more than half the world's population, there were no investors. And today, China is in the midst of an investor-driven real estate hyperbubble. So that's 10 times the people, each with 10 times the currency, and within each population there is somewhere between 10 and 1,000 times the number of people with an investor mindset. That's somewhere between 1,000 and 100,000 times more currency that will someday come chasing gold and silver this time around. Yes, this time it really is different. Top 10 reason number 3. Gold and silver should buy a whole lot more. There's an old myth that in ancient Rome an ounce of gold could clothe a man from head to toe with a toga, sandals, and a belt, and that today a man can still clothe himself in a suit, shoes, and belt for the price of an ounce of gold. People claim that this has always been the case. Nothing could be further from the truth. Before the Federal Reserve was created, you could buy an outfit with an ounce of gold, but by the end of the Roaring '20s, due to inflation, you couldn't. Then by the beginning of the Great Depression, because of deflation, you could, but by 1970, an ounce of gold would only buy the shoes. Then just 10 years later, it would buy a top-notch suit, very fine shoes, and a great belt, but by 2001 it could only buy a shoddy suit, cheap shoes, and a crummy belt. Yes, gold has always been worth something, but it has always zigzagged in a range of purchasing power. However, this myth is based on a true fact. Humans mine gold at about the same rate that they make babies, so there is relatively the same amount of gold per person on the planet today as there was in ancient Rome. So let's dissect the myth of the Roman suit to see why gold's purchasing power has varied and what it could be in the future. The gains and efficiencies made since ancient Rome are mind-boggling. To make a toga required cotton to be planted, tended, picked, and separated from the seed by hand. Then the cotton had to be hand-washed, combed, and spun, taking someone weeks to make enough thread for a toga. Then the thread was dyed with colors that were hand-mined or harvested. The cloth was then hand-woven, cut, and stitched into a toga. The shoes and belt were equally labor-intensive. Today, with factory farming, cheap fuel, modern irrigation, and pesticides, it's possible to tend thousands of acres planted at densities never before imagined. Giant combines drive through the fields, plowing the dirt and sowing the seeds in one pass. At harvest time, specialized combines pick the cotton and other machines separate the seed. With factory ranching, efficiency is the same story, with thousands of sheep being tended and shorn in production line fashion. Then trucks deliver the cotton or wool to where it's washed, combed, and spun into miles of thread in minutes, then dyed with cheap mass-production dyes and woven into miles of cloth by machines, again in minutes. Then the cloth is stacked many layers thick, and a computer-guided shear cuts out dozens of each of the parts of the suit in a single pass. The parts go to an assembly plant where workers who specialize in making the left sleeve or the right leg and such do so at amazing speed. Workers that can turn out dozens of suits per day do the final assembly also at a blazing rate. Then it's shipped to a store where you can pick from dozens or even hundreds of styles, colors, and sizes. And it's a similar story at the shoe factory that spits out a pair of shoes every few seconds and the belts that come off the production line by the thousands. The end result is that the time value of the Roman outfit most likely measures in months of human labor, whereas the modern suit contains only a few hours. This is true of all the other stuff in society as well. When it comes to the time value contained in stuff, everything today is on sale for a tiny, minuscule fraction of what it once cost. And as proof to support my thesis, I offer this. Today, a good percentage of the world's population has maybe 100 times more stuff than 99% had 2,000 years ago. Think about it. You are surrounded with furniture, cell phones, computers, TVs, refrigerators, grocery stores, cars, planes, hotels, restaurants, a great bed to sleep in at night, and just about anything else you want. By contrast, 2,000 years ago, with the exception of the ruling class, most people made a subsistence living barely able to afford the things they needed to survive. In many cases, a great bed or a pair of shoes were extravagances they would not experience in their lifetimes. So if this is true, and it is, then why is gold's purchasing power so low? If there's so much more stuff per person, but the same amount of gold per person, shouldn't an ounce of gold buy many, many, many times more stuff than it does today? Absolutely, emphatically, yes, it should. Then why doesn't it? because of the other big factor in busting this myth. In ancient Rome, if you wanted to save some of your wealth for the future, there was only one asset available for you to save your purchasing power in: real money, the gold and silver coins that made up their money supply. Today, if you want to save some of your wealth for the future, you do so with financial assets such as stocks and bonds, and maybe a tiny portion of currency in a checking account. These highly liquid assets actually compete with gold and silver as a place to store your wealth. They all dilute each other's purchasing power. In ancient Rome, there was only one place to store your wealth. Today, there are thousands. So that's the answer. With technology, machinery, and super cheap energy, we've become 1,000 times more efficient at producing stuff, and at the same time, we've created 1,000 times more ways to store our wealth. The gains in purchasing power that gold should have made, due to man becoming so much more efficient at making stuff, have been almost exactly offset by the proliferation of alternative liquid financial assets in which to store that wealth. If it weren't for all those competing currencies and alternative financial assets, gold would buy many, many times more stuff. So what happens to those alternate financial assets in the inevitable market crash that lies out there in the future? Those trusted financial assets suddenly become hocus-pocus voodoo financial assets as their value evaporates, just like those AAA-rated mortgage-backed securities did in the crash of 2008. What happens to fiat currencies in the coming currency crisis? All those currencies become hot potatoes that nobody wants, causing hard assets, like gold and silver, to be bid up to the moon. Either way, gold will buy a whole lot more stuff someday in the near future. Today, there is about $40,000 worth of liquid financial assets per person versus only $200 worth of investment-grade gold. That's a 200-to-1 ratio. That means that in a crisis, if just 10% of the wealth invested in those alternative financial assets were to come chasing gold, its price would rise 20-fold. The moral of this story is, if you want to buy 20 suits, shoes, and belts a few years from now, buy an ounce of gold today. Taken separately, any one of these reasons is a compelling case for gold and silver. But if you look at them all together, and you take into account that for the very first time this gold and silver rush is going to be global, you realize that these reasons aren't just additive, but they multiply upon one another. Therefore, my top 10 reason number 2 is, it's all happening at once, and this time it's global. So, there's more stuff per person than at any time in history, but the same amount of gold, and competing currencies and other assets have diluted gold's purchasing power. Today there's 200 times more wealth stored in these competing assets than there is in gold, and if only 10% of that wealth comes chasing gold, its price will rise 20-fold. And in the crisis I see coming, it's going to be a lot more than just 10%. The world is now in uncharted territory. Budget deficits, trade deficits, and government debt have ballooned to lethal levels. Real estate, stocks, and bonds are all in bubbles, and the credit, debt, and derivatives bubbles threaten to take down the world economy. It took years to create these bubbles, but it will only take days or weeks for them to burst, and all bubbles eventually burst. In the inevitable crash and currency crisis that are bearing down on us, most trusted investments will probably evaporate while gold and silver are pushed into hyperbubbles. Because when it comes to greed and fear, fear is by far the more powerful emotion, and in a crisis, fear is what drives investors. Today there are 10 times the people, each with 10 times the currency, and somewhere between 10 and 1,000 times the number of people with an investor mindset than in the last great gold and silver rush. That's somewhere between 1,000 and 100,000 times more currency that will come chasing gold and silver this time around. For the very first time in history, all the world's currencies are fiat, and fiat currencies have always failed. Couple that with the facts that every country on the planet is creating currency on a suicidal scale never before imagined, that every 30 to 40 years the world has an entirely new monetary system, that we are overdue for the transition to a new monetary system right now, and you now have the recipe for a cataclysmic economic event that will be the greatest wealth transfer in history. It can either impoverish you, or it can enrich you beyond your wildest dreams. Knowing this, you think I would take every spare unit of currency I can get my hands on and buy gold. So why don't I? Because silver is undervalued compared to gold, so I buy both, but I buy mostly silver. And finally, top 10 reason number 1, I sleep better. As I said at the beginning of this article, I believe that an economic crisis of historic proportions is headed straight at us, and there is no avoiding it. Never before have all the governments on the planet simultaneously laid down the foundation for the perfect economic storm. I believe that there will be a global fiat currency crisis that will cause the bubbles in stocks, bonds, and real estates to burst simultaneously. This will result in the greatest economic crash the world has ever seen. Things could get pretty bad. The possibilities range from my being completely wrong to total economic collapse and a financial Armageddon from which we never recover. Toward the bad end is the possibility of the failure of the monetary system, which could cause rioting and a disruption of the food supply. But in any range of possibilities, there is something called a bell curve of probabilities. What that means is that either of the extremes, also called the tail risks, are very unlikely to happen, but that something in the middle is very likely to happen. Believe it or not, I am not a doomsayer, but nor do I believe the government when they tell me everything is going to be all right. I think it's going to be something in the middle. Yes, I believe it's going to be the greatest crash in history, but I have great hope. Man is an amazing species. We have a resilience and ability to adapt and bounce back from anything. Yes, banks could fail, but new, more efficient ones would take their place. Yes, the world monetary system could collapse, but this could be a good thing. If we could just make fraud, theft, and conflicts of interest illegal for the financial sector, like it is for the rest of us, and if we could just leave the free market alone and stop manipulating and meddling with it, it would quickly provide us with a new, efficient, stable, and honest monetary system that would increase the prosperity and standard of living for everyone. Yes, the stock, bond, and real estate markets will probably crash, and for those who are unprepared, it will be devastating. But if it's going to happen anyway, and if there's nothing I can do about it, then I may as well try to figure out how to turn this catastrophe into the best thing that has ever happened to me. As I have said many times, there are these brief moments in history where the safest asset class, gold and silver, the safe haven to protect your wealth for the last 5,000 years, simultaneously become the asset class with the greatest potential gains in absolute purchasing power. In periods of crisis, gold and silver are the asset class that outperform all others. This decade will see the greatest financial crisis in history. That means it will also be the greatest wealth transfer in history, and that means it is the greatest opportunity in history. How have I prepared for the range of possibilities? I've been accumulating precious metals since 2002. To me, this relieves a lot of anxiety. And now, I've purchased a supply of emergency food. I've given one of these assortments to each of my family members, my best friends, and all of my employees. This has relieved most of my remaining anxiety. How do I sleep at night? Very well, thank you. So now that you know why I buy gold and silver, I'd like to show you how to buy gold and silver. Before you buy an ounce of gold or silver for yourself, I want to send you a free copy of my book, Guide to Investing in Gold and Silver. It tells you everything you need to know about owning gold and silver, including where to store it, the pitfalls to avoid, how this industry works, and which bullion products I buy for myself. I'm proud to say it's the best-selling book on precious metals investing of all time. I've just released a fully updated version, and it's yours absolutely free. All you have to do to get it is to follow the link below and tell me where to send it. Enjoy the book, please share this video, and thanks for watching.